My name is Seth David, and I started SethDavid.com because I wanted a new place to show you how to do the things you need to learn how to do to make your life easier so that you can run your business more efficiently and more effectively. And I became famous because I uploaded a lot of videos to YouTube on how to do various things in QuickBooks and a lot of other things. And eventually, we started getting into specific industry stuff, and real estate has been a big one for me. So today's video and blog post is on how to use QuickBooks Online to record a HUD-1 final settlement statement. Now, if you are here over at SethDavid.com, by the way, you can go down here to where it says Industry, and you can get a plethora of content that's for fun and for free, all for real estate brokers and agents, and how to do the accounting in QuickBooks Online for you good folks. This is going to deal more specifically with how to enter the HUD-1. So the first thing you'll want to do is on SethDavid.com, just click over here to Useful Links and Resources. And if you want to play around, you can click here on the QuickBooks Online Test Drive. Otherwise, you can click QuickBooks Online Login. That'll take you right to where you log in to your QuickBooks company file. Now, I was very impressed with a client of mine recently who had done some one-on-one with me. He had seen some of the real estate videos I had put out on the web, and he reached out to me and hired me for some one-on-one training, which we did. And after I showed him how to enter his HUD-1, he actually came up with this checklist that he goes through every time he's entering in a HUD-1. He did this in Word. You can't actually check off these check boxes. So he puts these little forward slashes in as he completes each thing so that he knows it's been handled, because he doesn't understand it necessarily from the accounting fundamental perspective like I do. He understands it from the perspective of a guy who knows a lot about how to, purchase property, develop it, and sell it, but not necessarily, he's not an accountant. So for him, it's more of a mechanical process, and he just wants to follow the procedure step by step. So I'm going to make this available to anybody who wants it for download. So you can use this checklist as you're going through your own HUD-1 final settlement statements. So who's ready to see what this looks like? Let's go over here into QuickBooks Online. And I've already got us set up in my little startup sample company file. And I've got it set up with just $10,000 contributed capital into the business. So you can see what this looks like all from kind of a clean slate. And I've got my same client's permission to use a settlement statement from a property that he actually purchased not too long ago, at least as of the time I'm recording this. Of course, I'll have the information obscured by the time you're watching this about, who the players are here. And I'm just going to show you the numbers. Let me scroll off screen, make my editing job a little easier on that. Now, this HUD-1 actually is going to be a little tricky. This guy is doing his deals with hard money loans. He's not borrowing money from the bank. So you get a little non-traditional, but that's sort of why I wanted to show you how to enter this with this, because when you're doing it where the bank is the lender, it's going to be a lot more straightforward even than what you'll see here. The trick first things first, is to get the information laid out in the journal entry form. Now, some of my accounting colleagues are going to say that I shouldn't show you journal entries if you're not an accounting or bookkeeping professional, because they don't like to have their clients do journal entries. Me, I don't really care. I like to show you how to do a journal entry because for a transaction of this nature, my opinion is that this is a much cleaner way to book the entry. So I'm going to teach you journal entries. So let's go to the quick create plus sign, and we'll go over to journal entry. And we're going to enter a bunch of debits and credits. So the purchase price on the surface looks like $43,000, but you're going to see where that's going to change actually. But initially, just lay the numbers out exactly as you see them here. Settlement charges $121,607.56. We're going to break those down a little later on. Then we have $402.14 and $75. $402.14, $75. Total should be $165,084.70, and it is. Then we have a $165,000 loan. And then we have $35.15 in a credit. And then we have $49.55 ultimately additional money due from the borrower. All right, now we've got a balanced entry. But wait, there's more. It seems a little weird, doesn't it? that we have a property that we bought for $43,000, and then there's charges for 3 times that amount in connection with the purchase. That's because there's really additional amounts that go into this number that are buried in this number. And again, it's because of the hard money loan thing. So we're going to take a look at that. But first, let's go back up here. And we want to break up these settlement charges. And this is very standard. They all come from line 1400. So we're going to go to the second page, and we're going to get into the details. Now, you'll have a few sections here in the settlement charges. And notice at the very bottom, it all goes to line 1400 with that same total. So let's go back up here. And the first section that we're sort of concerned with here are the items payable in connection with the loan. These are loan fees. So notice, though, that we have $90,000 in there. The $90,000 was actually a draw. You can see it says rehab fund. So this is actually a draw on the loan. So this money actually went into his bank account. So again, things aren't described that well here. They're really not. It's not a fee. It's not a loan fee per se, but it looks that way according to this. He didn't pay $90,000 to borrow $165,000. That wouldn't make any sense. So you're going to see how we're going to deal with that as I go through this. So let's deal with the loan fees first, actually. And what I'm going to do is I don't need necessarily every single itemized line item within this. I don't really care. I want the, I'm going to actually add everything except for the $90,000. And the 150 below it, because that's a draw fee, which goes directly in connection with the draw. So I'm gonna just on my other screen real quick add all the rest of this up. Now, when I add up all these numbers again from the $3,300 all the way to the $45, I get $4,520. So let's book that in here. We're gonna need to add some lines here because we're gonna need to break this up a bit. So this is $4,520. And then we're going to put in the $90,000. And then we're going to put in the $150. All right, so these are all, this is loan fees, not lien fees. This is, we're going to put it into an account called loan escrow. And you're going to see how that works very soon. So other current assets, and then other current assets again for the detail type, save and close. And this is really bank fees. This is the draw fee, so I'm going to book this to bank charges, right? So that takes care of the $90,000 on the $150 and everything else. And this, by the way, we're going to put to 123 Burbank Street. That's going to be a fixed asset in the name of the property. Right, and then within that, I'm going to create a sub-account called original cost. I like to do that because if we're going to be rehabbing the property, which we will, then we need to, I like to show that separately. So we have the original cost plus all the improvements or rehab costs. That adds up to the total basis in the property. So I want other current assets here, and other current assets here. Save. So that takes care of that. Now the 402.14, let's go back. We're not done with the settlement charges. What am I doing? I'm getting ahead of myself. All right, let's add in some more space here. All right, so the next section will be, there's another 111061. There's items required by a lender to be paid in advance. So this is interest expense actually. So let's get that in here, 111061, interest expense. And this is going to be an expense. And we do have interest paid. Save and close, and that's 111061. Back here, now we have the title charges. So again, I'm going to go onto my other screen and add those up real quick. Now, when I add up all these numbers from 295 all the way down to the 50 here, it comes out to 1641.95. Let's go back to QuickBooks, put that in. And these are going to be the title fees. And if you haven't already set these accounts up, these are all expenses. Title fees is an expense, loan fees is an expense. Loan escrow was a current asset. This is also set up as a current asset. I put it in other current assets because in this case the property is being treated as inventory. It's not something, if I was planning on owning it, then it would be a fixed asset. But since it's really inventory, I'm buying it, I'm rehabbing it, and then I'm going to sell it, so it's really another current asset. And these projects don't typically take more than a year, which is the other reason for making it current as opposed to long term. All right, so we've got those title fees in. Now we're going to put in the recording fees. So again, I'm just going to add these up real quick on my other screen. When I add up the government recording charges, that's from the $60 all the way down to the $60 down here. That comes out to $1,920. Let's put that in. Recording fees, also an expense. Okay, and then we have some additional settlement charges. So we're going to call those settlement charges. And this is where it gets interesting. So we're going to have the 50 and the 205, which is $255. Okay, and then here's what I was getting at the very beginning. This $22,000 is they call it an assignment fee. It's not an assignment fee. It's actually an additional amount included in that needs to go to the purchase price. So we're going to go back up to the top and add that in. So 43,000 plus 22,000 gives me 65,000. That's the true cost of the piece of land that we bought here. So that's how we're going to get that balanced. And somehow I've gone off by $10, so something got added incorrectly here. Let's go back and see where the mistake is. Okay, so I found one error here, which is that when I added up these numbers, it should have come to 4320, which means there's actually more errors that I've made, so I gotta keep going through this. And the other mistake was down here. I left out the 210 on these other settlement charges. So instead of 255, we need to just add another 210. And now our entry's back to being in balance. And that's always has to be back in balance. Now let's get rid of this extra line. And let's go back and fill in the information for what the 40214 was. Let's go back in there. That's property taxes. Okay, and then the 75 was water escrow, so that's utilities. The 165,000 is going to be loan payable, and I'll do it loan payable 123 Burbank Street. That's the money we owe on the loan. And then I have something to explain to you about this having to do with that $90,000 rehab draw. And then the 3515 is down here, and that's a water prorate, so that's also going to go against utilities. And then this was the cash due from borrower, so we're going to put this into escrow deposits. So because what this means is that when all shook out, the borrower, my client, actually had to pay in another $49.55. And then again, just making sure everything balances. Now, next thing, QuickBooks Online specifically has the property designation that we could use for location tracking. And I renamed it property. It comes in initially named, I think it's actually named location. So you can change the nomenclature on that. That's in all those videos that I showed you that are over here on SethDavid.com. If you look at the real estate for real estate accounting for brokers and agents. So we can certainly use this to describe the property. I'll just say, give me 123 Burbank Street. And then create that. The other thing you can do is use the customers, which is this name column. That's basically your customer list. So I can certainly add that in here. And the difference is really just in the reporting that you can do on this stuff. That's all it is. So if you're not sure, use both. Figure out which reports you like and whether or not you care about using the property or the customer more. The one drawback, let me not use the word drawback. Too late, I already used it. But the one thing about the property is that the property can only be assigned at a global level on any transaction. In other words, if you want to split a transaction up, you only get to book it to one property. So if you think you're going to be in the habit of having to record an amount and then split it up within the same transaction among several properties, then you definitely want to use the customer rather than the property, because the customer enables you can do the split at the customer level. You can't do the split at the property level on most transactions except for the journal entry, as you're seeing here. So of course you'd want to just copy this down. Okay, and then we certainly do the same here for the customer name version of the property. I know this was very, very exciting for you to watch me do this. I suppose I could have paused the recording. So, we have a balanced entry. The only thing you could also do here that I haven't done and will not do in this video is fill in descriptions. I don't want to make you watch me typing in descriptions for another 5 minutes. So this is how we get the balanced entry. Now you're wondering where this is going to get offset and where this is going to get offset. And the answer is it's all going to happen through the bank account. So here's what happens. Let's save this. I'm going to say save and close. We can also use class to track things. That's what it just warned me about. So we have two things going on here. And let's run this balance sheet for today. So we have our original cost of $65,000 in the property. We have this escrow deposits number and we have this loan escrow number. So we'll deal with each one separately. First of all, the escrow deposits is it's a check he would have to write to pay in. Now so you could, if I go back into the journal entry, instead of recording it to escrow deposits, you could just record it to the bank account. You can put the bank account in here. I don't like to do that. I think it's poor form. I don't like seeing journal entries in bank accounts. In a bank account, as far as I'm concerned, there should be deposits and checks or payments of other kinds. There should not be a journal entry in there. I just think it, again, this is my thing. I just think it's poor form. So I don't use the bank account or run it through the escrow deposits. The other reason for doing this is that oftentimes there is a big lag between the closing settlement date, which should be the date of your entry, by the way, and when a check like that may end up getting written. So that's the reason why I run it through the escrow deposits. We'll go back to the report summary. Let's duplicate this so we get it into a new window. And then what's going to happen theoretically is he's going to, have to write that check for $49.55 out of his bank account. So let's record a check. The payee would be the title company. And we'll do it on the same day. And this is going to be for escrow deposits. And for $49.55. That's one thing. Save and close. Yes. Refresh the balance sheet. And your $49.55 is going to zero out. And notice it's gone. No more escrow deposits. Wait. I don't know. I hate the fact that this defaults to last month. Okay, now there's our escrow deposits for zero. The loan escrow is going to be an amount that's going to get deposited into his bank account. So let's say a few days after, and QuickBooks is behaving wonderfully here. Let's refresh the page again. All right, I'm just going to go home, add a new transaction, bank deposit. So again, theoretically, this would have happened a few days later, but I'll leave it on the same day because I'm using today's date as of the day I'm recording this. So this is going to be the loan escrow because this is money that's going to come into his account. The title company is going to fund him $90,000. So again, the example that I'm using, the HUD-1 settlement statement, the company who prepared it did kind of just a very sloppy job of putting it all together because, there's a lot of in and out. Like, how did he end up owing $50 when he was getting $90,000 out of escrow deposited into his bank account? They were it's almost like somebody wasn't paying attention and was just dropping the numbers, and they could have easily netted this out and just given him $50 less. In a way, you could argue that this way it's much clearer that he actually drew down $90,000 and ultimately had to pay in an extra $50, but whatever. I just think the whole thing was sort of laid out poorly, and my client agreed. We agreed on this together. When we were actually going through it, and I was showing him how to enter it. So we're going to put that $90,000 into his bank account because, again, that's the draw he got on the loan, so that he can actually use that money now to pay for the expenses to do the rehab work on the project. So let's just go over to reports here, and let's go to the balance sheet. And today, or all dates, I don't care. And so now notice the $100,000. I recorded the $49.55 out of the wrong account. Let's fix that. Okay, so now we have the right amount. Remember, we started with $10,000 of contributed capital. We added the $90,000, making it $100, but then we just subtracted the $49.55. And if I click in here, you can see exactly what I mean. There's $10,000 we started with, and I wish that would go away. And then we paid $49.55, and then we got $90,000. Really, really simple. I see what it's doing. It's giving me a pop-up so I can see the missing information on that. Very nice. So that's how we get that $99,950 and 45 cents. And notice now the loan escrow is gone. So the loan escrow is just, again, it's a clearing account I use to run those the draw on the loan down. So in a sense, what's happened here is out of the $165,000, $75,000 was effectively used to pay all the fees in connection with the purchase of the property and the purchase price, and then he gets the other $90,000 to spend on doing the rehab work that he needs to do. So that's how it all kind of balances out. And then of course he'll need to pay this loan off when he sells the property. Obviously we're counting on him selling it for a lot more than what he paid, plus all the fees, plus what he spends rehabbing it, the $90,000. So that'll have a nice profit from which to pay this $165,000 off when he gets the property sold. That, my friends, is 20 minutes, actually more than 20 minutes of free video on how to enter a HUD-1 in QuickBooks Online, how to use QuickBooks Online to enter a HUD-1 final settlement statement. As always, I hope you enjoyed this, learned something along the way. I hope you're having an absolutely fantastic day. And if you need more help, just come over here to schoolofanswers.com and sign up for a one-on-one session with me, and I can walk you through the entry of your own HUD-1 final settlement statement and make sure that you have everything you need to get the entry to balance, to get the balance sheet right on your books, as well as the profit and loss. Although, as you saw, this whole thing was really on the balance sheet. I can explain all that to you. I can walk through your own HUD-1s with you and make sure that you understand exactly what to do and how to get it entered. Again, just come over here to schoolofanswers.com, go over to private sessions with Seth. You can also hire Harold. He's great. And we can help you get these HUD-1 final settlement statements entered and balanced, and make sure that your balance sheet reflects things properly, accurately, and error-free. As always, I hope you learned something and had some fun along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.